Me? Yeah, I can hear you.
Yep. Yep. I can hear you too.
Okay, cool.
Hmm.
You again.
Yep. Me again. Hmm. So to move on with the discussion of what we were saying last time, now we need to move on to having a concrete demo of the results. So now I'm working in that direction, and of course, having the virtual environment, which will be part of the demo. So we'll have a virtual environment in which I can showcase and I can sort of artificially recreate these sort of Bitcoin scam structures. And
Hmm.
then I can allow my software to detect it. This,
Perfect.
right? And along with the structure where I do it on some real world investigations as well. This is less dynamic than the other approach, but this also adds a dimension to it. And then getting all those results, congregating them together, and putting it all in one place.
What do you mean dynamic result?
This is less dynamic because I do not have, like, how in a virtual environment, I can create any type of scam I want. I can have a particular rug pull, I can have that rug pull hit an exact price. It's extremely dynamic and I control it. If I'm using a real world example, then whatever rug pull happened, whatever price it hit. I do not have that option of customizing that when the program has to go ahead and detect it. So I'm just saying that that environment is less dynamic. I obviously have less
Oh,
control.
yeah, yeah. I thought the opposite. I thought you were saying
No,
doing the
no,
test bed was less dynamic. It's
no,
exactly the
no.
opposite. Okay, I'm cool. I'm cool.
Yep. Test bed is more dynamic. So we're going to be doing test bed for
And
sure.
you want to make sure it's visual. You know what
Yep.
I'm saying?
Mm-hmm.
Uh, and sometimes slow it down. If I'm making this up because I'm thinking about the test bed I have to build, so that they can see how it's thinking. Okay. Like in mine, oh, I just looked at this blockchain. Looks suspicious. I think I'll follow this. You know what I mean? Um, it'll really help potential investors or customers, that kind of thing, really understand, wow, okay, I can now, wow, it's not so much technical as it is, it's talking to them on how it's solving the problem.
It's no longer just about here's this technology, here's what's happening, here's the math. Now it
That's
needs to
right.
become a story.
That's
Here's the
right.
problem. Okay, here's the first thing, here's the second thing, here's the third thing, here's the result. It needs to be a narrative now. So
That's
I'm
right.
working
That's right.
on pulling all that mathematics into a tight narrative that can then be put into a slide. So I'll go over some of my plans for how this will look exactly. And then I want your feedback from an investor perspective of how compelling would that be.
Okay. What else?
So we'll begin with a website, which I'll publicly host so that the investors in the room have access to it. I think that'll be compelling, being able to open up on your phone, on your laptop. I think that'll add an element of interaction. So that's my first idea. And those websites will be such that, okay, you just have a field, you input which crypto token you want to analyze. So let's say I know Bitcoin and I want to analyze Bitcoin. You get back visuals, graphs of our risk analysis, and our numbers, and an explanation of what that number means right there on the site. So that, I think, adds an interactive element. Now on to the analyses we will do. The first is that now I'll create that test bed. And first I'll explain within that test bed, okay, here's the first kind of scam that we are analyzing. So scam one, we're looking at a rug pull. I'll go through the test bed. I'll explain how the rug pull is simulated, what the rug pull is, all of that. And then we'll show step by step in very simple and visual terms with graphs how exactly it is that our software detects that rug pull and what it gives you in return. Then we'll move on to wallet analysis. We'll discuss what is wallet analysis, why does it matter. Then we'll go into the test bed. Here's what my test bed looks like for wallet analysis. I'll go through the test bed. I'll explain the hypothetical scenario that we are creating. And then I'll show how our algorithm tags the suspicious wallets correctly within that test. So there's an element of interaction, and you get to see examples from the test bed and from the real world for both dealing with tokens and dealing with wallets. And obviously, before we move on to any of this, we would have a long, lengthy discussion about why does it matter understanding the risk associated with each token and risk associated with each wallet.
So as you're talking, yesterday, and you mentioned just now, you come up with a risk score. Okay. Assessing for risk is a nuanced difference from finding fraud. Finding fraud is very specific. It's binary. I found it or I didn't, or I suspected with a certain confidence level. That's different than saying, make an assessment and give me a score. Okay, so the first time I heard that was yesterday, that you're doing scoring. So what I'm thinking as you're talking, and I'm a naive investor or customer, that kind of thing, is you've just in 5 minutes thrown out a lot of buzzwords, which are all the right buzzwords. Oh, go look at the wallet. We're going to do this. We're going to do that. Okay, it makes my head hurt because as let's say I am a business guy in the blockchain business, I get it. But once you started to say risk to me, what you're saying is that there are elements, there's a flow, there's a set of things that happens, and the totality of that flow, okay, incrementally as you look at it, and you see whatever holes, problems, that risk score goes up. Okay, but you need to explain, you see, the journey first. So in other words, I have no clue what risk means, to tell you the truth. Is risk fraud, or is that fraud just one type of risk? So, you know what I mean? Anyway, I don't know if I'm being articulate enough, um, but now I'm losing track of the breadth of what you're trying to sell, and it's not clear to me anymore.
Okay, so that makes perfect sense. So when it comes to the risk score, that score indicates the confidence level that there is fraud. So if I have a risk score of 1, I'm extremely confident that there is fraud. If I have a risk score of 0, I'm extremely confident that there isn't fraud.
Okay, can you draw a pipeline picture?
Okay.
You know what I mean by a pipeline?
Yep. Process flow.
Start at the top. I'm doing stuff, with some people in MFE right now. First, we normalize, we look at it, we smooth it out, we look for this, then we move to the next stage. Those stages in English provides the understanding, honestly, of how you're approaching the question of identifying fraud. First, I look for not equations, but the effectively what those you have equations, but you have a process that strings them together and ultimately to give you something. Walk that through, because your demo is okay. Remember, the first stage is I have no idea. You know what I mean? First stage, we scan the blockchain for blah, blah, blah. And we're looking for 3 things. Okay. Maybe it's a flow chart. If we find that, then I'll tell you, we know, not with a degree of confidence, that there's something happening. So if there's something happening, the next thing we want to do is look at the children of the father. I'm making shit up, but you're articulating to me in ways I can understand it, and therefore judge, ooh, that's pretty cool. I don't know how they do it, but I understand kind of how they get from point A to point B, and I kind of like it. You see where I'm going? Mm-hmm. Now your demo is simply, okay, now remember, we actually are chunking this into 5 steps. At the end, you know what we can give you? We can tell you fraud, not fraud, and with what degree of confidence. Okay? I didn't start with, I can give you a risk score. And then I can do blah, 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 blah. I'm lost. If the objective is to find fraud, then your risk score, as you just explained it, doesn't stand on its own. It means nothing, to tell you the truth. I'm an auditor. I'm a whatever. I get a number. Okay. Number over X means what? You know what I'm saying? You might as well have a binary yes, no. But now the way you've explained it, it's a confidence. Now I get it. Okay. If it's a confidence of 20%, eh. If it's a confidence of 80%, ooh, okay. What do I need to do to get it to 100? Anyway, enough
Yeah.
comment. Hopefully you get what I'm saying.
So we'll begin with a close discussion of the problem, right? What's exactly happening in the crypto space? What are rug pulls? What is malicious use, right? Why should you care? Problems. Then move on to the definitions. So when I say risk score, what I mean is a confidence of fraud, right? So these terms, making sure that they make sense to
No, stop, stop leading with risk score. Okay. It's a different product then. And that's not what you want to sell. I'm not selling a risk score. Oh, I'll look at it and it gives you a number. I want to identify fraud. There are 5 types of fraud. Blah, 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 blah. Each one of those types of fraud leaves a certain pattern or entrail. These are what they actually kind of leave as the breadcrumbs. So what we're really doing is we're first trying to classify the type, the sense of it's not just about that there's something sneaky, is that we know there's probably 5 or 10 different ways that they do this. And we're looking for those fingerprints. I'm making this up, but you're explaining the process of how you identify fraud. At the end, it's about we give it then overall a confidence score. I don't know what a risk score is. What the hell does that mean?
So
Really?
at
What
the
the hell's
end,
a risk
we give
score?
it this confidence of fraud score. Initially, we discussed the types of frauds and the categorization and that sort of pipeline that we're using to categorize and detect this fraud.
Right.
Okay, so we begin with problems, types of fraud, what they look like, how we're categorizing them, our pipeline. At the very end, we provide an interpretation of the confidence of fraud. What does that mean?
That's right.
Okay.
And by the way, how do you read this? What we look at is if that number, or maybe it's a gas gauge, okay? The way you show it, and it's in the red. That's all you can show. You
Right.
understand what I'm saying?
Mhm.
I don't care if it's 53. What
Mhm.
I care is I have to worry about it if it goes into the red.
That makes perfect sense to me. So and that's just part of visualizing, right? That's just
That's right.
part of
That's right.
manipulating
That's
visual.
right.
Yep.
Because remember, you're not the one going to be using it. They are. Oh, okay. I don't need to be a quant to understand if there's fraud or not. They've netted it all down to they think it's this with this level of confidence. Wow. And all I got to do is read a gas gauge.
So problem, then we move into types of different frauds, the structure of that fraud, how we're detecting it, how we're categorizing it. At the very end, we provide here's the interpretation of the confidence of fraud.
Perfect.
And then
Yep.
from there, we can move into like a short discussion just in English. How does that process work? Just no math right now. That's for, when someone is doing a deep dive later. Right now, we're just speaking to the investors. So we keep it all in English. And here, since we have essentially two categorizations of fraud, one is fraud that has to do with manipulation of a crypto market. The second is malicious activity that has to do with wallets. So, in I guess the part where we discuss our pipeline of how we're categorizing these things, that's where we'll make this separation. That's where we'll.
Yes. And it's up front. It's not at the end. Okay.
Yep.
What you're basically tell them what you're going to do it, and tell them what you did. Okay. So I'm getting the conceptual understanding through that upfront, very simplistic. Oh, so there's 2 types of fraud. Okay. That we're looking at. You then need to say, and by the way, each of these frauds give different fingerprints to us, or they manifest themselves in a way to make them detectable. This type we can track the blah, blah, blah. But this type, we have to track blah, 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 blah. And knowing that, then we go down these 2 separate paths.
So that is for.
Then you go through the demo, then they walk through it with the confidence score. And then again, you have already told them what you do. You don't have to go back and now say, whether you want it or not, I'm going to show you how we do it. Okay. The show's over. I've showed the demo. Now wrap it up and walk through what they just saw. So, what did we just do? We've laid out how this stuff happens and the two kinds of things and the way we can look at it. We explained to you how we do this through a pipeline. We even showed it to you. So at the end, Akshat, so what's missing then at that point? I've showed it. I've told you. Now what?
Just
At the end of your demo.
Just bring it all together, restate everything in simple terms. What did you just see happen and why does it matter?
Well, kind of. It's called the ask.
Yes, then the ask. What do we need?
Yeah, I showed the demo. Show's over. Okay, wrap it up. I showed you this. I showed you that. Check, 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 check. In fact, it could be a slide that goes check, 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 check. Are there any questions of what we just talked about and what I showed you? Blah, 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 blah. Answer the question. Okay, next slide. Now, how do we get there from here? Here's where we are. Here's where I want to get to. And this is why I need your help for funding. So now you've kind of led me on. Ooh, this is pretty cool, eye candy. Okay, what's the ask? He sold me. Now what? Are you done? Because you showed me a demo. Is it just about what? Wrapping it in a wrapper and selling it? Or you're doing more to it? So that's what you got to start talking about. It's really the ask. Where you're going from here, what you need to be successful, and that therefore you're asking for X dollars or X something. And here's how I'm going to spend that X in a pie chart. I'm going to spend, I won't go with real numbers, 50% of it is going to further product development. 25%, we really have to start focusing on, honestly, the marketing and sales. I don't know the right answer. The third is whatever. But that's the story. And finally, they're going to ask for the deal terms. Okay. And that's a whole different area, Akshat. I really, because we haven't talked about really the next step, the real dollars, what you need to do and what you're going to spend, how that's going to, it's either going to resonate or not. And then finally, okay, so you're asking for $250,000 and you're going to use it this way, this way, this way. Okay. So is it a safe? Is it a convertible note? Is it equity? And what are the terms? Oh, okay. We're going to do a safe, which is probably the easiest right now. And we're going to give it a valuation cap since we're pre-money. We're not making money of $3 million or $2 million, something small, low. Okay. And we're going to give you a 20% discount, a 5 million val cap, a safe, and go from there. Or it's a convertible note, in which case you give it interest rate and stuff like that. But you do have to nail what you do have to say something at the end there.
So once we're speaking, we either have to nail it down like, okay, is our structure for investment safe, private equity, note? We need to nail that down. So after the ask, in what form?
Well, yeah. Well, the ask is, I need X to do Y.
Right.
And here are the terms if you give me the money. That's the end of the story.
So
End of
terms
the
are part of
story.
the ask.
Yeah, yeah, yeah.
So my question from here is this is where we get into the details where essentially I need a little bit of your expertise here. I know what product we have. I can get us completely through problem, pipeline, definitions, demos, conclusion. Where we get to the ask, I can very easily lay out where we are right now, and I have a very solid plan for where we want to be in terms of developing the product, in terms of doing research.
Okay, stop.
Mhm.
Okay. It all starts with your financial forecast. Okay. Your financial forecast is effectively a reflection of the story. Okay. We started in 2024 and we did this. So zero revenue, whatever, 50,000 of costs. We did it ourselves, whatever the case may be. You need to have, you need to have at least 1 year back and 3 years forward. Now, who the hell knows what your revenue is going to be? But nobody's giving you a dollar for anything until you convince them. First of all, you convince them it's a great, it's a product, it's good. Okay. You're going to tell them, and by the way, here's how I see this going. In 2026, we're gonna have 5 customers, revenue of X. You have a little income statement, cash flow. It's going to show negative EBITDA at the end. That's why you need investment. Okay. So you're showing effectively the spending you're going to do. And at the end, from a cash flow perspective, it shows you're going to be in a deficit. And that's why you're getting the money. Because once you throw off cash, you don't need money. So the financial forecast is the next thing you have to do. And the financial forecast is a complete reflection of your assumption. Okay. So what do they look at? They look first at sales and they look at are you pre-money, meaning have you sold anything or not? Okay. So if you haven't sold anything, they're going to ask, are you working? Do you have any potential customer, any friendly firm that's working with you that's going to be your first guinea pig? Okay. You have to listen, or you're not ready for this. You understand? You're not ready to go for money. So, let's talk about the hard part here, because you're really good at telling me what it's going to take to do, at least the build. Okay, but you have no clue beyond that. So let's say you pick whatever number you pick, you're going to go from a small number to a big number, right? You're going to year one, year two, going to go higher. Year three, well, okay, great. Whether you go from 250,000 of revenue, making this up to over 3 years, 5 million of revenue. Let's just say I don't really care what the real number is. Then the very most important question is, okay, explain to me how you're going to get there. Oh, what do you mean? Well, what's your sales model? Right now, I would call it founder-led sales. That doesn't scale. You understand what I'm saying? Today, it's okay. Everybody expects it. That's what founders are. That's what startups are. But once you go next year, then the next, they want to know, when are you moving from a founder-led sales model to a professional sales model? And that sales model, we haven't even discussed. How do you sell the damn thing? It's not through an app store, probably not. You're going to have bag carrying salespeople. Are you going to be doing digital marketing? This whole story, whatever, at a certain level, you have to be able to tell as a CEO and founder. You won't get a dollar without it. And it's got to sound defensible. And the one big reason they're never going to give you money is because they don't believe two things. Your sales projections are crazy, and they're going to discount the last 2 years anyway. And they're going to say, okay, I know where you are now, and let's just talk about the next 18 months. Talk to me. How are you going to get to that number that you said you're going to get to 18 months from now? Okay. That's the next set of conversations you have to have. And I don't think you know. I don't know, but I don't think you know. Maybe I'm wrong. I don't think you have a clue. I
I
also
have
don't think you have a clue of going from, the garage to the income statement. Okay. Product development, sales, marketing, human resources, finance. Okay. I'm not going to have a CFO in the first year because I can't afford it. I'm going to have, so I'm kind of doing it on my own. You have to build the whole story of building the company, is what I'm saying. At least what's going to be happening over the next, like I said, year or two, with some believability. Nobody's going to believe you year 3 or 4 because who the hell knows?
right.
You get what I'm saying?
Yeah, we
Okay.
have to build the story around the building of the business itself. So how are we
Yep.
going to shift from the founder sales model to a more advanced sales model? What does that entail?
Mhm.
Um, and we have to make the sales projections. So, how exactly is it that we're going to meet those projections? They need to be realistic, and there needs to be a clearly thought out plan as to how we will hit each of those markers. And that, of course, is closely tied to the sales model. Friendly firm, I have one that I've worked with in the past already using these metrics. So, I can speak with them as well. And I will start reaching out to more over the course of this
Well,
period, we have this product to give these
that's it.
people
Just
so that we can reach more.
can you get one?
Mhm. Yeah,
Okay.
I've already worked with one before.
Okay. So is that one, then you're saying you have one, or you got to talk to them to formalize?
They're already using my API that's on Rapid API.
Oh, perfect. Okay. So you can in your you can reasonably say right now, I've got one charter customer, or I've got 3 charter customers. They are exercising our API. We're working with them and they're using it successfully to do blah, 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 or whatever. Then they're going to ask sometimes, oh, can I talk to them? So anyway, you get the idea. You really, you have to show it's more than an idea and a science project. Okay.
Makes perfect sense.
Yeah.
So another thing I'm thinking is maybe I reach out to more firms that are within this field over this time period. And if I receive some communications with them and we're in communications about this technology with them, could I possibly also include those discussions when I speak about, friendly firms?
Well, here's what you want to do. You're going to cast a wide net. It's time to find early stage customers that are willing to work with you. Okay. Because they see the opportunity and the first mover advantage of leveraging your technology to reduce risk and blah, 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 blah. Okay. Talk to as many as you can, because then you could say, okay, let me show you. Here's my chart. I've got 2 that are actively working it, and here's what they're doing. I've got another 5 in discussions right now. And I've got a campaign. There are at least 200 other firms. So the size of my potential pipeline is incredibly large. And this is how I'm going to attack that pipeline. And you are the thought leader. So what you're doing is you're not going to sell a product when you want to talk to these firms. You want to discuss blockchain fraud. And if they're not doing blah, 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 they're going to be at risk. And by the way, here are the 5 war stories of what's happened in the last 5 years with blockchain fraud. Okay. It's 11:01. I got another call.
Right, yeah, and I think our time is
That's
about.
it. Thank you very much.
Whoa.
Bit of feedback there.
Correct.
Well, I don't know who the hell's talking, but
Yeah.
I'm gonna have to get off. Akshat, you know how to reach me, and Professor, just let me know next time. By the way, as you know, I see about 30 startup decks a month. So there's, I could find when the time's right, plenty of examples. You know what I mean? Of saying, well, how did they explain it?
Okay.
Okay.
Yep. All right.
See you guys. Bye bye.
See you soon.